maybe we could just, it kind of jumps into the why own Bitcoin, but it's okay. I think we're
Yeah,
talking around very important
yeah. I'm bouncing
subjects
around.
here.
Sorry about
And
that.
I no, I like it. I think it's the right thing to do because it's not just what is it. I mean, I don't think you own Bitcoin because it's the greatest program ever written in the world. You own
Right.
it because of the problem that it's trying to solve. And so um, I don't think it's going to be news for anybody that we need a solution to the inflationary shock that we've seen since 2020. Um,
Yes.
there's a lot of reasons why we have not seen these levels of inflation since the 1970s, but it's recently the result of a pretty serious challenge that a lot of the G7 countries in the world are facing in terms of their national debt that has resulted from excessive stimulus during the pandemic, record deficits. They've got their trade wars and tariffs, energy insecurity. Like there's a pretty long list of overall macro problems that countries are dealing with, and you do have to ask yourself, who's when you think about some of the ways in which politicians have been spending money since the recovery from the pandemic, you know, why is it that there are record deficits this year? Or why were there last year?
Right.
We're in an expansion. I mean, the stock market is at all-time highs in the U.S. They have definitely an expansion happening, and yet they're still on track to have a deficit of $1.6 trillion this year. And the U.S. national debt service payments are now over $1 trillion. So
Yes.
if you just think about that for a second, the federal tax receipts are 5.5 trillion in the U.S. and they're spending $1 trillion on interest payments, right? I mean, if you think about that in your context of your own life, and you're sitting there and
Huge.
you're saying, how could I spend close to 20% of my income on interest payments? You
Hmm.
probably have too much debt, and that's
Yes.
very difficult to get out of. And it seems unlikely that the U.S. is willing to cut enough spending to get uh, their budget down to 4.5 trillion, so they can spend the extra trillion on interest, and that wouldn't even deal with the debt overhang. That would just be to balance the books. And as a result, they're not doing that at all. In fact, they're just, I think we've actually passed the point of no return in terms of politicians spending money, because once you realize that you're in trouble anyway, the people are like, well, why don't we just spend money on everything that we can think of, because it doesn't
Might as
matter.
well.
We're just printing it anyway. There's no any longer any restraint. And every 3 months there's a U.S. debt ceiling, concern in the news, and they always vote for an increase because what are they going to do?
Every time.
Um,
Yeah.
and and I don't think, by the way, I'm not trying to bash on the U.S. Canada's not doing a whole lot better on this, and the other
No.
G7 countries are in similar state. Folks who follow UK political news will remember Liz Truss. She came into
Oh
power and
yeah.
was a prime minister for less than the lifespan of a head of lettuce, was the joke. There was a head of lettuce on TV that people were saying, will this
Yeah.
head of
Blink of
lettuce
an eye.
stay fresh? And it was because of her budget. She tried to get a budget passed, which was calling for a whole lot more deficit spending, because she just kind of said, well, who cares?
Yeah.
And the bond market basically pushed her out of office because
Yeah.
they stopped buying UK gilts.
Yeah. And the
The bond
currency
market,
markets too.
yes, and the currency markets, and then all the pensions were going to have a problem because they own so many UK government bonds, and that was it for her, and they reversed the decision. So I think we're going to see waves of inflation over time. I think the intention of most governments and central bankers is to monetize the debt slowly enough that nobody can really see how it's degrading their purchasing power, but fast enough that they can eventually kind of skate back on side. So what does that really mean? I mean, it means that back to the point of like estate planning, it's increasingly difficult for investors to pass along value to their kids. It's increasingly difficult for people to save for the future.
Yes.
Um, Governments are going to continue to provide huge public services, because once you're printing money, you can do that, which is going to keep the economy looking strong, because the biggest marginal buyer of services will be the government using printed money. It's called fiscal dominance. And that's
Yes.
what really stops there from being a normal market reaction to high interest rates. And because high interest rates are kind of irrelevant now, if the government's just going to print as much money as they want, I think we will see interest rates come back down. It's our base case that we see, as
So do
we've
we.
already seen this year, more cuts from the Bank of Canada, but it also means more increase in money supply. The chart on the right hand side here is Canada's CPI. You can see it spiked up from being around zero during the pandemic to 8% in 18 months. There's only one reason for that. Everybody was getting mailed checks to go spend, and the economy was largely stalled because of the lockdown.
Money supply increased.
And by the way, it did for sure. And you know, we don't have to get into it, but CPI is not that comprehensive a number, and it gets adjusted when it has things in it that cause the number to be not what politicians like sometimes.
What they want to see. It doesn't look good for them.
That's right. Like, what's your real value? What's the real purchasing power? Like, if you've lived in any Canadian city in the past 20 years, have houses become more affordable at the rate of 2% a year inflation? No, right? There's lots of things that have had higher inflation, but they're not measured that way. So these are all the issues that relate to it. And these are all the issues that relate to people looking for hard assets. Again, real estate, but also gold, and now Bitcoin. And so it all kind of ties together with the challenges investors face today in terms of how to protect themselves against the loss of purchasing power of their savings.
Yeah, and again, 21 million Bitcoin, it can be divisible down to a Satoshi. And remind me again, is it 100 million Satoshis in a Bitcoin?
It is, and if that becomes not small enough, they can just get divided further again.
Divided further.
It's a good point. You know, if you own shares of a company, typically you'll see them issue more shares, and over time the shares outstanding increase. They give stock options to their employees, and it's dilutive. If you're in private equity, you see that dilution more directly when there's a new financing round for a pre-cash company. There needs to be no dilution for Bitcoin to scale to everybody in the world using it. It just gets divided into smaller and smaller pieces. So today,
it's like a split.
80,000. Exactly.
It's kind of like a stock split. Yeah.
Exactly. So you have a stock split. It's a great way to put it. And then you just have more shares at a lower price. And when you think about that, you'll say, okay, well, today, 80,000 Canadian dollars buys you one Bitcoin. It's very possible that in the future, if you go forward 5 or 10 years, you're not going to see one Bitcoin being affordable for a lot of people. But it doesn't mean it's no less useful for them. It just means that's just, you know, the price has gone up and you don't, you know, $80,000 doesn't buy you a whole Bitcoin, but it'll still be a hard asset. It'll still be just as useful. And so there's really nobody harmed by greater adoption, but the price will have to react to it in order for there to be more room for people to participate.
Which means it would have to go up for that to work.
Absolutely.
Yeah. Yes. Yeah. Just by not because it's just going to go up, but because the math behind it, for more people to be able to use it, the price has to go higher to make enough room down to the Satoshi level for a greater number of users to be using it now, which is an interesting property. That's the opposite of what we normally think of as money. If we kind of just go back a little bit again, and I know I'm flipping around, historically, how have people purchased and owned Bitcoin? So, we're talking about wallets, we're talking about Bitcoin exchanges, more still present day, true, but more historical versus now. You don't need to do that because there is some layers of complexity in going down that rabbit hole versus today, when an investor can simply just buy an ETF like from Evolve. So
yes,
how does that work?
So if you want to use Bitcoin directly and hold it yourself, and that's something that I do in addition to owning my ETFs, you can do that. It's something that I think generally you have to be pretty tech savvy to do because you have to have special software to create a Bitcoin wallet. You have to then take care of your private key and secure it yourself.
Don't lose it.
And if you lose your private key, you've lost your Bitcoin. Bitcoin's not gone anywhere. No. You just can't get to that Bitcoin on the blockchain, and nobody else can either. You won't know where it is, and if you knew the address it was at, you just can't send it to somebody else because you don't have the key anymore. And so some of the Bitcoin that's been mined so far has been lost. I think we've got about 19 million Bitcoin mined so far, and there's estimates as high as 5 million of it has been lost because people mined it, lost the keys, or lost the hard drive where they had the keys. So there's a lot of risk in.
Didn't disappear. It did not disappear. It's just the owners of that Bitcoin can't find their keys.
Absolutely. Think of the key as like your password. So you've got Bitcoin. It's on that ledger we were talking about. And everybody who has their own address on the ledger needs a password to send that Bitcoin to somebody else or to spend it. So if I want to send a Bitcoin to Peter, I need to put in my password when I send that transaction into the chain. Otherwise, the chain will say, well, you're not entitled to spend this Bitcoin and send it to anybody. You lose your password, there's no password recovery help desk.
Right.
your Bitcoin's still there. Arguably, it's more secure than ever because nobody has the key anymore,
That's right.
including you.
Yeah.
But and some people will say, well, the lost Bitcoin is almost like a donation to everybody else because instead of there being 21 million, there's now less available supply because that lost key represents some Bitcoin that will never be spent. And so it actually makes the money even more of a hard money,
right,
and more scarce.
Makes it more scarce. Yeah.
But the challenge with all of that is that you're taking a lot of risk on in terms of holding this yourself. So the analogy would be, you want to invest in gold. You could buy gold bars and hold them at home in your house, but now you've got to worry about how do you secure them there? What if somebody breaks into your house? What if your house, falls down on top of the gold? It's, it's just, who wants to deal with that? How do you deal with it when you're driving the gold from the vault to your house? What do you do with that security? And there's a better way. And ETFs exist for that reason. And we put an enormous amount of engineering work into getting EBIT put together for Bitcoin back in 2021. And we did it such that using it is the same as buying a stock or another ETF on the stock exchange. So this diagram, very high level, shows you how it works. You can go and buy as much EBIT as you want. The market makers that we work with will sell you EBIT all day long, and you will get the real-time price of that reflects the real-time price of Bitcoin through the trading day when you buy that. It's not going to fluctuate. It's not different. It's not derived from the price. It's the real-time price. And the way that it works is the dealer then turns around to us and basically gives the money that you've given them for the shares of our ETF over to us. And we then go and buy the Bitcoin and hold it securely with our sub-custodians who are Gemini and Coinbase. And our sub-custodians are best in class security for Bitcoin. They are holding the keys to our Bitcoin on computer systems that have never and will never be connected to the internet. It requires multiple people at Evolve to approve a movement of any of our coins, along with multiple people from our custodian Sidel in Canada, along with multiple people at Gemini and Coinbase to move our Bitcoin. So there's no possible collusion in terms of moving it without a whole bunch of security checks and approvals. All those checks are audited by EY every year. Every organization involved in our ETF, ourselves, our custodian, our administrator, we're all regulated. We all have very high standards of duty of responsibility. And then that allows us to have an ETF that trades on the stock exchange. There's another big reason for why you want to do this as well. And I think that has to do with how you build your financial plan. So Bitcoin is going to be an element of your financial plan if you're using it. It's unlikely to be your entire plan by itself. And working with an advisor on your overall financial plan is very prudent. And you want to be able to use Bitcoin alongside your other investments and be able to do things like rebalance every month or quarter, depending on the strategy you're following. You want to be able to consider how that investment is doing compared to your other ones and put it into your financial plan. That's going to be very much more difficult to do if you're doing your own Bitcoin with your own keys, because you're not really going to get the support out of the advisor team that you're working with. So ETFs make that simple. It's just another line item on your statement, along with any of your other investments.
Yeah, so it just shows up in your statement, just like any stocks you own, any other ETFs you own, any other bonds or GICs that you own. And it's all included, and you can track it as often you like to track it, whether it's daily, monthly, quarterly, or annually. And I like that. It's definitely a lot cleaner, and it simplifies it from I think the way you and I started investing in Bitcoin, initially, which is trying to figure out how to set up a ledger wallet and how to, transfer from an exchange to a wallet, and probably sweating bullets as you're making the transfer because you want to make sure it's going to the right address. And yikes, this just makes it a lot easier.
Yeah, for sure. Those were wild days, but I don't really miss the transaction where I worry if I've just lost all my money when I did the transaction. That's not a good feeling. So it's much
Yeah,
better to do it through a broker on the exchange and know everything's well sorted out.
yeah, exactly. So, and you know, and at the end of the day, uh, just regarding security, and I think you touched on it. So because this is an often thing that I keep hearing from people. It's like, oh, I heard, so and so friend of mine, had money on this exchange, and this exchange went under and lost. My friend lost all his Bitcoin, and therefore Bitcoin is bad because they dealt at one of these exchanges that weren't really on the up and up, and then they conflate that with Bitcoin is bad when really it's not. It's got nothing to do with it. An exchange is an exchange. The underlying asset that they're trading on that exchange is not necessarily even related to that exchange. The underlying asset could be solid, but possibly there might be a bad actor on an exchange trading it. So, can you just speak to that a little bit in terms of the security of Bitcoin at the end of the day, and also, and I know you just touched on it now, but really ETFs solve that problem to a large degree because you as an investor now don't have to deal with offshore exchanges to buy and sell your Bitcoin.
Yeah, I totally agree, Peter. And it really comes down to the value of having good, sensible regulation and why we're so excited that the US even has Bitcoin ETFs now, along with Canada.
Right.
Because it's not good when there is an asset class that people want, but the regulators in your country don't let you have it, because then you're
Right.
inclined to go to places that will let you have it that may not be regulated properly, right? FTX was the famous example last year that was not holding the assets to
Yes.
their clients appropriately.
Yeah. That's
They
the
were
one
in
that
the
keeps coming up.
Bahamas.
Yeah.
And yes, exactly. I mean, the CEO is doing quite a long jail sentence now.
Yes.
But they
Yes.
were in the Bahamas, and they were there because they didn't have regulations there, and so they were operating this exchange and they were operating it improperly. This is why we need good regulation. This is why we're
Mhm.
so happy that Canada
Agreed.
got there. And with as much as it was frustrating for the 4 years we were trying to get a Bitcoin ETF launched here. Um, I guess in fairness to the regulator, they wanted to make sure it was going to be safe and it was going to work, and that was important to them.
Anyway, I think that's all we have to say about that. It's a good thing that we have regulated ETFs in Canada.
Okay. No, I definitely agree.